Okay, so picture this. Every 6 weeks, the chair of the U.S. Federal Reserve walks up to a podium, and for about an hour, the entire financial world just holds its breath. This is the FOMC press conference, and it's gone from this super cryptic memo to a high-stakes, real-time drama. This whole thing is really the final act in the Fed's long quest for clarity. So let's dive in and see how we got here, and why literally every single word matters.
Here's what we've got lined up. We're going to start with a really bizarre mystery about how the Fed chair says hello. Then we'll rewind a bit to see why this press conference even exists in the first place. After that, we'll break down the event itself, explore how markets and machines analyze every syllable, and we'll finish up with what you should watch for next time.
All right, let's start with that high-stakes greeting I mentioned. It's a riddle that honestly sounds almost too strange to be true, and it all comes down to the very first words spoken at the press conference.
I mean, it sounds kind of nuts, right? But what if I told you that data suggests that depending on how the Fed chair says hello, markets react in completely different and pretty predictable ways? So get this, an analysis found that on days Fed Chair Jerome Powell starts with a casual, "Hello everyone," the S&P 500 has, on average, actually gone up. But on the days he uses the more formal "good afternoon," the market has averaged a loss. I mean, look at that difference. It's stark. So what on earth is going on here? Well, to understand that, we need to go back in time.
Yeah, this very modern, kind of weird statistical quirk is a direct result of the Fed's long journey out of the shadows. It's a story about a very deliberate and sometimes pretty difficult quest for transparency.
For most of its history, the Fed was, notoriously secretive. It would make these huge decisions on interest rates and then just release these short, dense statements filled with jargon. Traders, economists, you name it. Everyone was left to just guess what they really meant. It was like a global, high-stakes game of telephone.
And this is really the turning point. The 2008 financial crisis basically proved that all this guesswork was just too dangerous. The global economy was on the brink, and the Fed realized it needed a much better way to communicate what it was doing. So in April 2011, Chair Ben Bernanke did something pretty radical. He held the first ever regular press conference.
Let that just sink in for a second. For 98 years, the head of the world's most powerful central bank never consistently took questions from the press on camera. This wasn't just some small policy change. This was a revolution in central banking. It was a direct attempt to manage expectations and finally pull back the curtain. Okay, so how did this big push for transparency shape the event we see today? Well, now, every 6 weeks at 2:30 p.m. Eastern Time, this whole quest for clarity unfolds in a very specific two-act structure.
The whole thing kicks off with the monologue. This is the calm before the storm. A 10 to 15-minute prepared speech where the chair basically sums up the economy and explains the day's decision. But then comes part two, the Q&A. And this is totally unscripted. It's where reporters dig in for details, and this is where the real market volatility kicks in.
A phrase just like this, which actually came from Jerome Powell, can pop up during the Q&A. This is what the market calls hawkish language. It signals a tougher-than-expected stance on fighting inflation, and almost instantly, it causes the U.S. dollar to strengthen, as traders start pricing in higher interest rates for longer.
So, here's the twist. The Fed's transparency created a totally new challenge. With so much information flowing, the game shifted. It became about who could interpret not just the words, but the mood and the tone the fastest. And that's where the machines come in.
This is basically the cheat sheet for how the market processes what the chair says. Traders and their algorithms, they don't really have time for nuance. They just sort the tone into these simple buckets. Is he sounding hawkish? They call it higher for longer. And bam, the dollar rallies. Is he sounding dovish, maybe signaling a pivot to lower rates? The dollar falls. It's a system built for speed. So the key is that this analysis now happens at lightning speed, all thanks to something called algorithmic sentiment analysis. These are computer programs designed to listen to the live audio and instantly dissect it for emotional cues. Things a human might totally miss. And this brings us right back to our greeting mystery.
So here's how the machines solve the puzzle. Step 1. The algorithm scrapes the live audio. 2. It flags "good afternoon" as a deviation from Powell's more normal, informal hello. 3. It calculates that this formal greeting might suggest a more stern or even defensive mood, which it correlates with hawkish policy. And 4. It executes trades based on that probability, all in a fraction of a second. And it does all of that in just 300 milliseconds.
That's faster than your brain can even fully process the words being spoken. The market isn't reacting to the greeting itself. The machines are front-running the human reaction to the mood that greeting might signal. It's pretty wild.
So, the next time you see headlines pop up about an FOMC meeting, you'll be one step ahead. Here are a few key things to listen for. You'll hear these terms thrown around a lot. R-star, that's just the fancy term for the theoretical neutral interest rate. The dot plot is that super important chart showing where Fed members think rates are headed. And disinflation is the word you want to hear. It means prices are still rising, but at a slower and slower pace.
And hey, if you want to see this volatility play out in real time for yourself, keep an eye on the US dollar versus the Japanese yen. Because the interest rate policies in the US and Japan are so different, this currency pair often has the most dramatic, whiplash-like reaction to everything said at the press conference.
And this brings us to our final thought. The Fed opened its doors because it wanted to be better understood by all of us. But in doing so, it also opened them to machines that can analyze every subconscious verbal tick for profit. So it leaves us with this really fascinating question. Can human communication ever be truly transparent when it's being interpreted at the speed of light?